Good evening, friends. This side Rahul Magan here is a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. Standing today, which is 14th September 2019, practically at 1 a.m. in the morning, we're going to be shooting a very interesting video about one of the favorite derivatives I have, and that is participating range forward on an import side. Well, we already shared a lot of videos about the derivative contracts, and the hard reality is that now we are getting called from bankers and they are saying why you are sharing so much information in the public domain, but they do not know that our derivative bot Julia is under feeding stage and more to come. Well, all those people, those who are watching our video first time, range forward is one of the derivative contract which is used to cover both sides, which is used to cover the lower side and the higher side. While range forward is of two type practically, which is the import side and the export side. Although there are multiple kind of range forwards, the one is the participating range forward and one is the non-participating range forward. Till now we are having video about non-participating range forward, which practically means that the notional on both the sides are same. So basically range forward are of two types. One is the import side and export side. So all those people, those who are watching our video, let me write here like this. The sell side range forward means buy put and sell call, while the buy side range forward is buy call, sorry my mistake, and this is sell put. Now you can very well see that we are talking about the buy side range forward, that is why we have taken buy call and sell put. Well, your lower side is this, which is buy call, and the higher side is this. All those who are watching the video first time, buy call means right to sell, right to buy, but whom right? We'll discuss. Sell put means obliged to buy, but who is obliged? We will discuss. So we have taken an example of a corporate which practically requires no introduction, which is Reliance Industries Limited. As Reliance Industries Limited, Treasury is considered as one of the best treasuries we have in India. Apart from L&T and TCS, there are not more than 2 or 3 treasury functions which we have who are considered as best, which is Reliance Industries Limited, L&T and TCS. Now Reliance business model is pretty simple. They import the oil from worldwide, their respective vendors. They process it at Jamnagar and they divide the crude into multiple parts, which is known as crack spread. In the business we are entering very soon, not far, and they selling to the worldwide. Now Reliance don't believe in the natural hedging, which practically means that if they're buying at $100, assuming $100 of worth of oil, crude, and the total crack they are creating is $110, so they hedge 10. No, Reliance hedge 210, which is 100 import and 110 export, which is 100 plus 110, total 210, which Reliance hedge. Now similarly, that is why Reliance take range forward, Seagull, straddle, and almost all kind of option contracts, and they create derivative strategies as well, which we will discuss if the time would permit. Now in this we have taken an example of Reliance. So basically they are importing the crude oil, and for that they are taking a range forward. While the bank, those who giving them this is a Goldman India. The pair is USD INR because they are importing in US dollars, while the processing is happening at the Jamnagar, where the entire operating cost is in Indian rupee, like the salary of the worker, the plant, electricity cost, and everything is in Indian rupee. The total tenure of the contract is 12 months, which means the payment of that oil which Reliance bought, they're going to pay this to their vendor, assuming it is Iran for a minute, in 12 months from now. While the premium is zero. One of the biggest reasons we have in the world of foreign exchange that why chief financial officers are away from options is that they always believe that options comes up with a cost. Yes, but not all. Range forward can be created zero. The pricing which we have taken is from the Bloomberg. It's a live pricing I have taken. I myself computed this. It's a zero cost and I can challenge anyone, those who wanted to see. Why I call this as a participative, which is most important thing we have here, is that the riskier side for this trade is actually the sell call, where I have obligation, while the protective side I have is here, which is right. Now I'll write here, buy call means RIL having right to buy. To buy from whom? Goldman Sachs India. While this is Goldman right to sell. To whom? RIL. While RIL obliged to buy. Now we do not know where the Indian rupee would be, considering the fact that recession in India is already there. You know, every second day there is a news which is coming about India. Like today there is a news came that Ford, which practically do not require any introduction, they are winding up one of their two plants. So they are having two plants at different locations in Gujarat. Difficult to remember the locations, but one of their plants, which was actually designed few years before, I think couple of years before, for a total capacity to produce 280,000 cars, now it's being winded up. They wanted to wind up this. I don't know how many jobs, but probably thousands of jobs will go. But paid and sold media will not tell you that, don't worry. Now, the biggest issue is that because of these reasons, the rupee would depreciate, and rupee is depreciating actually. While we are talking, rupee has already touched 72.10. It is currently 71.50, and there are huge, basically there is a 99.99% probability that it would touch 75, and this is my prediction that by December it would surely be touching 75. The worst in India is yet to start. It is yet to start. People are thinking it has already started. The so-called intellectual administrative service thing, it has already started. They need to revisit their knowledge. It is yet to start. So what we do, we have taken a buy call where Reliance have the right, but the notional which we have taken is a 2 million. While we have taken a sell call where Reliance to have an obligation by the Goldman is having a right, we have taken notional as 500k. The so-called CFA, Certified Financial Analyst, and FRM, Faltu Risk Management, these degrees do not even teach you how to price a range forward. Forget participative range forward. If anyone who is watching this video is a CFA charter holder, and if he is able to produce me a single page, one page in the entire curriculum, level 1, level 2 and level 3, wherein the so-called chartered financial analyst / certified financial analyst shared how to price the participative range forward, I will give him 1000 Singapore dollar. In case he or she failed to produce, they will give us 5000 US dollars. That's how. As we know that options are priced via Tokyo cut. Now don't ask me what is Tokyo cut, because I have already explained number of times on a different video. Now I have taken, since here it is 200,000, which is 2 million, and here it is 500,000. So the risk of the Reliance in case rupee moves over 73 is pretty much secured. So the downside risk is secured for Reliance. Reliance is secure that nothing much is going to get loose. So 1 year from now, I price this today, which means 14th September 2019, practically 13th September 2020. So 1 year down the line, we're going to have 4 different Tokyo cuts, and let us see how things will move. So the one Tokyo cut I am taking is 75. Now Reliance having a right to buy 2 million at 78.03 from Goldman, but the Tokyo cut is 75. Would Reliance buy from Goldman? No, they will definitely not go to buy from Goldman. It means they have a gain of approximately 60.6 lakhs on notional terms in PNL. I am writing plus. Plus means the gain, minus means the loss. So on a notional term, let me compute again so that no wrong answer. Yes, 60.6 lakhs is the total, which means 0.6 crores, is the total gain on a notional term Reliance is having. Would JP Morgan sell to, or they forced Reliance to buy from them at 73 when Tokyo got is 75? Definitely not. So this is, that is. I know many people will think that why I am putting this notional loss, because many people are talking from FX angle. I never talk from FX angle, I always talk from FX and accounting angle. Like our earlier video, and in all of my videos, I have told you there are many people, not many, there are people, those who know how to price range forward, but out of them, hardly one or two know how to do the accounting. So from an FX angle, this is inside. 73, 78, this is inside, it will go to market. But on a notional, if we add accounting, this gain we have to record, although it is notional. Remember that knowledge of foreign exchange is good for nothing if you don't know accounting, especially IFRS 9, 7 and 13. If you do not know the accounting, then accounting of foreign exchange is a half job done. Simply, it's a half job done. Let us take 77. Now, would Reliance buy from Goldman if market is at 77 while they have a right at 78? No. So they are having a gain of 20.6 lakhs, which is 0.2 crores. On a notional term, let me put plus. Would Goldman sell to Reliance at 73 if the market is at 77? No. Worthless. My mistake, I should have write worthless here, I should have write worthless here, and the net is 60.6 lakh and this is 20.6 lakhs. Plus means gain. While let us take an example 80. Would Reliance buy from Goldman at 78.03 while the market is at 80? Absolutely. And don't forget, here it is $2 million. 2 million. 80 minus 78.03 into 2 into 10 raised to the power 6. So total is plus 39.4 lakhs real gain. Would Goldman sell to RIL at 73 because Goldman is at buy put? It is sell put. Sell put means for Reliance. Reliance is obliged. While would Goldman be selling to Reliance if market is at 80? Goldman will definitely not sell. Market is at 80. Goldman will sell at the market. Now once again, so the net loss is 39.4 lakhs, which is roughly 0.4 crores. Now let us take an extreme case of 85. Would Reliance be buying from Goldman if the market is at 78.03, if the market is at 85? 200%. So this is roughly 1.4 crores is the real gain Reliance have. Would Goldman sell to Reliance or they force Reliance to buy at 73 if the market is at 85? No, which is worthless. So the net gain for Reliance is 1.4 crores. 1.4 crores. The rest three is at basically lakhs. Now let us take an extreme case again Although everybody know that 1 year down the line, Indian economy is heading as a bankruptcy. It doesn't matter to me whether you agree with my opinion or you do not agree with my opinion. But one thing I know, that Indian economy is heading as a bankruptcy, and sooner or later Indian economy would be bankrupt. Assuming Indian rupee will touch to 70 1 year down the line, the probability of touching, now I expect rupee to touch 75 by December since I'm shooting this video, and 1 year down the line I expect rupee to be closer to 75 to 76 somewhere. I'm expecting rupee to breach 72 in at the end of October, and would continue to maintain 72 till somewhere 72 it will breach in October, would continue to maintain 72 till first week of November, and then it start depreciates more, because I don't expect carry trade to happen this year, because rupee repo rate cut by RBI and federal and political pressure on the Federal Reserve to cut the rate would surely impact the carry, and the tax on the FPI which being put up by the government, and the dissatisfaction and the recessionary impact in the India would surely impact the carry trade this time, which would ultimately impact on the Indian rupee. If rupee will go to 70, then they will not buy from Goldman, rather they have a gain, which is this is 1.60 crores. Notional. While here, Goldman will sell at 73 and would force Reliance to buy. Rupee is at 70, there is a loss of 3 rupee for RIL, which means 73 minus 70, which is 3 into 500,000. Don't forget that it is participative, which means that here we are taking 200,000 while here we are taking 500k. In alternatively, we have created the participative of 4:1. While I also agree that on Reuters and Bloomberg there are numerous combinations which we can create. It depends how the company is. Company like Reliance can create a competition from 1:1, which is known as non-participative, to in fact 7:1 also. And they might use Seagull, straddle, range forward and everything. We can explain everything here, but everything is not free. There are a lot of things which is subject to consultancy as well. Here they are losing roughly 15 lakh rupees. So the net loss is the difference which you can say, which is 1.45. All those intelligent people, those who are thinking that range forward is a difficult product, all those who are thinking that range forward is always non-participative, which is both sides the notional has to be same, all those fake degrees like chartered financial analyst and faltu risk management, those who are not teaching this concept, and all these fake degrees, those who do not teach IFRS, need to remember that the pricing of the participating range forward has been taken from Bloomberg live, and I can challenge anyone, those who are CFA and FRM, thinking that there is even a 1 cent wrong in that pricing, 1 cent wrong, and I am ready to pay any price if I lose, and they will pay the price if I win. Remember that foreign exchange is an ocean. There are humongous amount of instruments we have worldwide, and now the we are very lucky that Chicago Mercantile Exchange, now they are number 1 in SOFR futures, which is secured overnight financing rate. Although the unfortunate part is that different countries of the globe are having their different versions, like Singapore coming with SOAR, Australia already have their index, the talks are there, Hong Kong coming up with that, the ARRC, Alternative Risk Reference Committee, they are coming up with which is the FRN, Floating Rate Note Transition Plan, 6th January 2020, I think 4 or 5 months from here. CME, Chicago Mercantile Exchange, coming up with SOFR options, secured over financing rate options, and that would be pretty handy. I'm waiting how it would happen. If the time would permit, we're going to have this video. But don't have this mindset that foreign exchange is only forward contract. foreign exchange is something which is beyond the convention of anybody. If throughout my lifetime I will start make the video, only thing for me, I will not be able to shoot the entire what we have in the foreign exchange. We already sitting on 807th video. This is 807 video. So this is about participating range forward, a perfect product for the people, those who are in India on the import side and wanted to cover that too risk-free using options. This is from our side, and well, at the same point of time, we are very pleased that next month we are applying for a banking license in Singapore. Winning or losing is alternative thing, but I assure you one thing, that this phone, like you have our fixed income platform, this phone would be a bank for treasury consulting soon. Treasury consulting will assure all the client, customer and everyone, those who are watching our video, that we will make this phone as our bank. And I assure you one thing, the day Treasury Consulting get the license, PPP, private placement program and FX and trade finance, everything will come online and in the public domain. Everything will come online and in the public domain. With this, we thank you very much. Have a great time. Talk soon. You know my mobile number, email ID, everything is there on our fixed income platform, vast in 174 countries of the globe, which is www.fixedincome.global. www.fixedincome.global. Have a great time. Talk soon.